The world is obsessed with gold right now. Every time inflation spikes, banks wobble, or the economy looks shaky, investors rush into gold like it's the only safe asset left on Earth. Financial news channels talk about it nonstop. Governments are hoarding it. Retail investors are buying coins, ETFs, even gold-backed apps. But while everyone watches gold, silver is sitting quietly in the background. And that might become one of the biggest financial opportunities. Because historically, silver doesn't stay quiet forever. When it moves fast, sometimes violently fast. And right now, multiple signals suggest silver may be deeply undervalued compared to where it could go next. What makes this even more interesting is that silver isn't just a precious metal anymore. It's becoming an industrial necessity. That changes the entire equation. Most people still think of silver as cheap gold, a shiny metal people buy during crises. But today, silver is used in solar panels, electric vehicles, batteries, medical equipment, AI infrastructure, military technology, and advanced electronics. Modern economies literally consume silver. And unlike paper money, you can't print more silver. That supply-demand imbalance is where things start getting very interesting. Because while demand is exploding globally, silver production isn't keeping up at the same pace. Mining companies are struggling with rising costs, declining ore quality, environmental restrictions, and geopolitical issues. Some analysts are even warning about long-term structural shortages. Think about this carefully. If the world transitions deeper into renewable energy, electrification, and high-tech manufacturing, silver demand could rise dramatically for years. At the exact same time, supply remains tight. That's the kind of setup markets pay attention to. But there's another reason many investors are suddenly watching silver closely: the gold to silver ratio. This ratio measures how many ounces of silver it takes to buy 1 ounce of gold. Historically, the average ratio has been much lower. Whenever the ratio becomes extremely stretched, silver has often outperformed gold afterward. In simple terms, silver may be lagging behind, and markets hate imbalance forever. If gold continues climbing due to inflation fears, currency debasement, central bank buying, or recession concerns, silver could eventually start catching up aggressively. And because silver's market is much smaller than gold's, even modest capital flows can push prices sharply higher. That volatility is exactly why silver attracts attention during late-stage economic cycles. When silver rallies, it rarely moves slowly. We've seen this before. Back in 2011, silver surged close to $50 an ounce. Now compare that period to today. Global debt is significantly higher. Money printing has expanded massively over the last decade. Geopolitical tensions are rising worldwide. Confidence in fiat currencies is weakening in many regions. And central banks are aggressively buying hard assets again. Some investors believe this environment could create the perfect conditions for another major silver cycle. But here's the important part most people ignore. Silver is not a guaranteed investment. It's volatile, extremely volatile. Silver can rise 20% in weeks, then crash just as quickly. That's why smart investors don't blindly chase hype. They study positioning, macro trends, industrial demand, monetary policy, and market psychology before making decisions. Because timing matters a lot. Still, the core thesis remains difficult to ignore. A globally necessary metal, limited supply, growing industrial demand, monetary uncertainty, and a price many believe still hasn't fully reflected those realities. That combination is why some investors think silver may not just rise, but explode. And if that happens, the biggest surprise won't be that silver moved higher. The real surprise will be how few people saw it coming before it happened. One of the biggest mistakes investors make is assuming silver behaves exactly like gold. It doesn't. Gold is primarily a monetary asset. People buy it to preserve wealth, hedge inflation, and protect against uncertainty. Silver does some of that too, but silver also behaves like an industrial commodity. The dual identity makes it far more unpredictable and potentially far more explosive, because silver isn't driven by just one market. It's influenced by manufacturing, technology, energy policy, investor sentiment, inflation expectations, interest rates, and even geopolitical supply chains all at once. That complexity is exactly why silver can remain undervalued, then suddenly reprice very fast. And there's another factor many retail investors completely underestimate. The silver market is tiny. Globally, the amount of money flowing through stocks, bonds, real estate, and even gold massively outweighs silver. That means it doesn't take enormous institutional demand to create serious price pressure. A relatively small wave of capital entering silver can move the market aggressively, especially during periods of fear, and fear may become one of the biggest catalysts ahead. Around the world, governments continue piling on debt at historic levels. Central banks are trapped between fighting inflation and preventing economic slowdowns. Interest rates remain politically sensitive. Banking concerns haven't fully disappeared, and many investors are quietly questioning the long-term stability of fiat currencies. When confidence weakens in paper systems, hard assets often benefit. That includes silver. But what makes silver different is its accessibility. Gold has already become expensive for average retail investors. 1 ounce costs thousands of dollars in many currencies. Silver, on the other hand, still feels psychologically cheap to many people. That matters more than most realize. Retail psychology can create powerful momentum. When average investors feel they're early to an opportunity, participation increases rapidly. Social media amplifies the excitement. Speculation accelerates. FOMO enters the market, and silver historically thrives during speculative phases. In fact, some analysts believe silver's future rally may not be driven only by fundamentals, but by perception. If the public suddenly starts viewing silver as both an industrial necessity and a monetary hedge at the same time, investor demand could spike dramatically. That's a rare combination very few assets possess. Now add one more layer to this story: green energy. The push toward renewable infrastructure is increasing worldwide. Governments are investing billions into solar energy, electric grids, EV production, and advanced electronics. Silver plays a critical role in many of these technologies because of its unmatched electrical conductivity. Solar panels alone consume massive amounts of silver, and as adoption expands globally, industrial demand could remain elevated for years. The problem? New silver discoveries are not exploding higher. Mining takes time, permits take years, production costs continue rising. Environmental regulations are becoming stricter. Political instability in mining regions adds further uncertainty. In other words, demand can rise much faster than supply can respond. That imbalance is what creates powerful commodity cycles. We've seen similar situations before in oil, uranium, lithium, and other resource markets, where years of underinvestment eventually triggered aggressive price moves. Silver could be setting up similarly. But despite all these bullish arguments, most people still aren't paying attention. And ironically, that may be the strongest signal of all. Major bubbles usually form when everyone becomes obsessed with an asset. Taxi drivers talk about it. Social feeds flood with predictions. News channels cover it nonstop. Silver hasn't fully reached that stage yet. It still feels overlooked, underdiscussed, almost ignored by mainstream investors. That's often where the biggest opportunities begin, not when excitement peaks, but before the crowd arrives. Of course, no market moves in a straight line. Silver could remain volatile. Prices may pull back sharply multiple times. Short-term traders may panic during corrections. But long-term cycles are built on fundamentals. And right now, silver's fundamentals are becoming harder to dismiss. A metal essential to modern industry, a hedge against monetary instability, a historically undervalued asset, and a market small enough to move violently when momentum finally arrives. That's why some investors believe silver's next move may not just be another rally. It could become one of the most important commodity stories of the decade. So the real question isn't whether silver has potential. The real question is this: what happens if the market suddenly realizes how important silver actually is? Because markets are emotional. They don't move purely on logic. They move on attention, narratives, fear, greed, and momentum. And sometimes an asset stays ignored for years, until one catalyst changes everything. That catalyst could come from anywhere. A recession, a banking crisis, a geopolitical shock, a surge in inflation, a collapse in confidence toward central banks, or even a major supply shortage that forces industries to compete for physical silver. And once momentum starts building, silver has a history of becoming extremely difficult to control. That's because silver sits in a strange position financially. It's small enough to be volatile, but important enough to matter globally. That combination creates the possibility for dramatic price swings. If institutional money, retail investors, and industrial buyers all begin competing for exposure at the same time, the supply squeeze could become very aggressive. And unlike stocks, companies can't simply issue more silver overnight. Physical scarcity changes market behavior. This is why some experienced investors don't view silver as just another trade. They view it as asymmetric, meaning the downside may feel limited compared to the potential upside if the thesis plays out correctly, especially after years of underperformance. But timing still remains the hardest part, because markets can stay irrational longer than people expect. Silver may continue moving sideways for months. It could even fall before rising again. Short-term price action often shakes people out before larger moves begin. That's how emotional markets work. Most people buy after massive rallies, not before them. And by the time mainstream headlines start screaming about silver, much of the easy upside may already be gone. That's why smart investors focus on positioning before the crowd notices, not after. Now, there's another uncomfortable reality investors should understand. If silver truly explodes higher, it may not actually be a good sign for the broader economy. Historically, strong moves in precious metals often reflect deeper problems underneath the financial system. Currency debasement, debt instability, inflation fears, declining trust in institutions, these conditions usually push hard assets higher. In other words, silver's rise could partly reflect weakness elsewhere. That's an important perspective many people miss. A soaring silver price might signal growing stress inside global markets rather than prosperity. And considering today's economic environment, record debt, fragile banking systems, geopolitical tension, and persistent inflation concerns, those risks don't feel impossible anymore. At the same time, technology keeps increasing silver's importance. AI infrastructure requires enormous amounts of electronics. Electric vehicles need conductive materials. Renewable energy systems continue expanding. Advanced military and medical technologies rely on silver components. Modern civilization quietly depends on this metal far more than most people realize. And yet, despite all that, silver still trades at levels many analysts consider historically cheap relative to gold and inflation-adjusted highs. That disconnect is exactly what bullish investors are betting on. They believe the market eventually reprices reality. Maybe slowly, maybe violently, but eventually. Of course, nobody can predict exact timelines. Anyone claiming certainty about silver's future price is guessing. Markets remain unpredictable. Risk always exists. But some opportunities become interesting not because they are guaranteed, but because the reward-to-risk setup becomes difficult to ignore. And silver may be entering that category, an overlooked asset, critical to the future economy, supported by growing industrial demand, historically undervalued, and positioned inside one of the most unstable global financial environments in decades. That's why the silver story matters right now, not because hype says so, but because the fundamentals, history, psychology, and macroeconomic backdrop are beginning to align in a way that investors rarely see. And if that alignment continues, the next silver move may surprise almost everyone, especially the people still ignoring it today.